Boom, we're live. We are going to talk about the truth about Palm Beach County housing right now. We're going to go into April's numbers right now, real time, actionable data, real time information that you need if you're thinking about buying or selling in Palm Beach County. We're going to discuss the true numbers because the reality is anybody can tell you anything. People lie, numbers don't. Data screams. Shout out to the biz doc, Tom Ellsworth. He says that all the time, but the numbers don't lie. The data doesn't lie. What often is very misleading is the numbers that are shared, especially as it relates to real estate, are extremely lagging. They lag everything else that's happening in the economy. So the last thing that you're typically going to see that falls when there is an economic crisis, condition, recession, or boom or bust or whatever it might be, it's typically real estate prices that are going to lag several years behind the financial markets, right? And so, having been a stockbroker for 20 years, having traded through all of those bear and bull markets and all the systemic risk and all the black swan events that happened from I don't know, 1996 to 2011, 12. I'm not exactly sure what the timeline is, but every single bad thing that happened and every single good thing that happened in those markets, I experienced in real time and traded around and through, right? And with that, I have a lot of experience, a lot of pattern recognition. And what we're seeing in real estate right now is very similar, right? And some of the things that we're seeing in terms of headline news are extremely disturbing. If you watch this channel at all, you see me talking about what's happening on the private equity side, where accredited investors are going bonkers. They want out of their illiquid investments and they want to pull their money out like a run on the bank because they don't trust the valuations of the investments that were made in the portfolio. Now, most of those were technology related. Most of those were because AI disrupted that software space. And it's only recently, although KKR was one of them, and geez, I don't remember the name. Was it Deutsche Bank? Anyway, a real estate fund that only focuses in real estate investments, they capped the amount of redemptions that are allowed from the fund, right? And so they have the legal right to do so. And anybody who signed up for this knows what they signed up for. If they don't know, shame on them. They get what they get. But it was always known and it was always a feature and function of the fund manager to be able to cap the redemptions or stop the redemptions, period. End of story. So lots of headline news around this, lots of skepticism around this. And I remember when there was the Enron crisis and mark-to-market accounting issues that were pervasive everywhere, especially during the great financial crisis, but nobody trusted that their money was safe, right? When the consumer does not feel their money is safe, well, then there's going to be a run on the banks. And I'm not predicting any of that. I'm just sharing my experience. Well, let's get right into the data because that's exactly what separates the men from the boys. And very clearly stated, it must be known that most of the time when you talk to a real estate agent or look at any of the news that's out there, whether it's Redfin, Zillow, or mass media, what they're typically sharing is very old. At minimum, it's a month old. What we're going to talk about is real time. And so what I did is, so to be clear, we're talking about Palm Beach County, right? I'm talking about all of the areas in which I have access to through my MLS. So if you have requests that are in Palm Beach County, Dade County, Martin County, then put them in the comments and I will address them as we go along. But I'm going to start with, and to be very clear, these are single family homes. I'm starting in the market that I don't know, I haven't previewed any of this information. We're both looking at it in real time. I think if there's going to be a challenged market, it's likely to be Port St. Lucie, right? Now, let's confirm what I think to be true and find out if it is. Yeah, so we're going to start with for sale versus sold, and we can look back February versus January, and then we can see March versus February, right? This is all of March, right? This is actionable information up to and including yesterday. Today's April Fool's. This is not an April Fool's joke. Although There's supposed to be, in fact, I believe, actually, I'm certain there is a big news conference. There is a big national announcement being made by Donald Trump at 9 o'clock. So I'm hoping that we get some news out of that and from him, but I'm going to try to respect the boundary of the hour. But I don't know; these things can this can go long, depending on how many markets I actually chair to choose. And there are a lot of things we got to cover, right? So we've got the market does not like uncertainty. Every market hates uncertainty. There's a lot of uncertainty in the market right now. People are concerned. Oil prices are up. Oil prices are down. Stocks are trading with maximum volatility. There's volatility across every market, and there's volatility in the real estate market. It just shows up differently, right? And there's a massive distortion between buyers and sellers, and it'll become obvious in a second if the patterns hold true from last month and the month before that and the month before that. I don't know. We're going to find out, but we're starting in Port St. Lucie, right? This is for sale versus sold and pending. You can see what January versus February was like, right? But we're not really interested in old data. We are interested in what March versus February looked like, right? So the for sale listings in Port St. Lucie for single family homes was down 68%. The sold transactions, meaning the properties that were on the market that actually sold, down 30%, almost 31%. These are big drops, right? Pended down 8.8%. But we also have to bear in mind this is still a small data set, right? 404 for sale. Well, actually, it's 404 down to 127 is a big jump. But that's what it is, right? And I'm not necessarily surprised because as interest rates go higher, and yeah, we did prior to the war, we did see mortgage interest rates coming down. But then when the uncertainty started, we started to see a role reversal. We started to see a tightening. We started to see mortgage rates increase. And there was some real confusion around the way the treasuries were trading and the bond yields. And there's all kinds of complex things that are happening. I don't want to lose the audience, but there are certain inversions that don't really make a lot of sense and fly in the face of what is expected to happen. But nonetheless, we got mortgage rates that are increasing, right? As mortgage rates increase, anybody who is sitting with a 2%, 3%, 4% mortgage is never going to trade out of that if it doesn't make financial sense for them to do so. And when mortgage interest rates are close to 7 or 8 or 10 or 20 or whatever they might be, I can tell you there are going to be a lot more home sellers that are completely unwilling to trade out of that. It doesn't make financial sense. And the only time it ever makes sense for you to buy or sell a home is if it is right for you. Period. That's it. Anybody who advises you otherwise is run like hell. Reach out to me immediately. We would love to help. And I'm going to have breaking news as it relates to mortgages. I've got some real big news as it relates to the mortgage business, as it relates to my personal real estate business. But I'm going to save that till the end because I want to respect your time and go over the numbers because, again, they don't lie. But if you look at these trends across the board, current versus previous month, current versus same month a year ago, current versus same quarter a year ago, it's a bloodbath, right? Down 93%, down 93.5%, down not, well, it's consistent with 93, but no bueno in real time, right? So it is what it is. There's less sellers, there's less buyers, and in Port St. Lucie, they're taking a major hit. Look at look at the massive difference between the light green bar and the dark green bar in terms of what's for sale and what's sold, and then the trend line of what has ended. And the numbers speak for themselves, right? So from there, let's go to average days on the market. Well, not surprising. What we're looking at now is March. I'm not going to go into the lagging data that is old, right? You can see it yourself, I hope. But average days on the market downtick 10% in March, up to and including yesterday. 96 days versus 107, 94 days versus 96, down 2%. I guess that's good, right? It's a decrease. And if you're selling your home, well, you want to do it in a shorter amount of time. But it is what it is, right? Average days on the market, as you can see, kind of took off in November of 25, and started to consolidate a little bit in January and February. But the trend is not your friend, period. It looks so far in Port St. Lucie, but we're going to go into average price versus sold in a second. And again, this was very, actually, there are two entries for Port St. Lucie. So I'm going to cover them both because honestly, I'm not sure. Obviously, there's a difference, and I'm assuming one is bigger than the other, but let's get okay. Well, then there's a dupe entry in here, and that one should be removed. Okay, so there's no, as you can see in the ST Lucie, there's no data for Port ST Lucie. Let me just make sure that's consistent across the board. And that just proves to me that there is a glitch or an error in this software, which, by the way, is great. It's you access to real-time data, understand where you have leverage and where you don't, how to create leverage, whether you're buying or selling, period, no matter what market you're in. But I'm not going to spend time on, on, on an entry that doesn't exist. So we were looking at month supply, but I jumped ahead. Let's talk about the thing people really want to know about, which is price, right? Okay, so what you can see, February versus January, active average price or average active price versus average sold price. More concerned with the sold price, average sold price. Now, again, to be clear, this is a macro picture of Port St. Lucie, right? It is very, very macro, meaning it is much wider than it would be if we were to drill this down into the hyper local markets that exist within Port St. Lucie. But there are lots of them, right? And so while this information is very helpful from a big picture perspective, it is not at all helpful if you're looking at a specific neighborhood within Port St. Lucie or any of the other markets that I'm going to cover. The only one I'm going to go hyper local into is West Boynton Beach in the canyons, which happens to be where I specialize, happens to be where my family lives, happens to be where I sell a lot of real estate. And so that zip code, I'm going to go hyper local into. Everything else, I'm going to stay macro. I'm not going to cover condos. We can do that on a different live stream, but I'm committed to sharing this data in real time at the end of each month. So you know what's happening at the beginning of each month. And obviously, if you've got questions, concerns, or want to know about a hyper local market, that exists in every area that I cover, then I'm obviously happy to do that. You can reach out to me any way you want. Send a smoke signal. I don't care. All of my contact information is, I think, on the screen right now, but let me check that. And no comments. Okay, cool. That makes it easy. No requests. And there's 7 of you watching. So thank you very much. Also, I'm streaming this for the first time in lots of different places. So I'm on YouTube, Instagram, Facebook. I think I'm on LinkedIn even. I tried to get TikTok, didn't work, but whatever. We'll figure that out some other day. But also, highly doubt that anybody who's watching me on TikTok is ever going to be buying a home from me through TikTok. But I don't know. Maybe I'm wrong. Yet to be determined. All right. So we're talking about price, right? So average sold price February versus January down 8%. No bueno if you're selling. And then quick roll reversal. And, basically we got a wash March versus February, right? 452 versus 421, an uptick of 7.4%, which almost negates the down 7.9%. But basically trading flat so far this year, right? And it is what it is, right? So if you're looking in Port St. Lucie and you want to know more information, please reach out. We'd love to help. If you need financing anywhere, please reach out. We would love to help. And what I've learned about mortgage over the last year and what I've learned about some of the direct lenders that are out there, some of the big brands that are out there, some of the names that dominate the market that I was brainwashed are the best alternative for lots of different reasons. I've come to learn there's a lot I did not know, but I feel a fiduciary responsibility to share because my commitment has always remained the same. share the truth about what's happening, no matter what, irrespective of market conditions, so that you, the consumer, the buyer, the seller, the investor, can go out there and make the best decision with the best information in order for you to make the right choice for yourself, for your family, and for your financial bottom line. But that's for St. Lucie. Month supply of inventory. Woo-wee. What happened between August and December is a massive spike in inventory, right? But February versus January, well, massive uptick, up 36.8%, almost a year versus 8.4 months. And then quickly retraced the exact same pattern, but improved a lot. So now in March, it's 5 months of inventory, 5.1 to be exact, versus a year and 2 months, a drop of damn near 60%. That is volatility. That's what I'm talking about in terms of volatility that exists within our markets that are here in Southeast Palm Beach County and primarily Palm Beach County, right? Although we're talking right now about Port St. Lucie. So from there, I think we covered it all. I'm checking to see if there's any comments. There aren't any. That's cool. But I see some of you out there watching, so thank you for watching. I appreciate it. And now let's go from there to also, I realize I don't think I can see comments any place but YouTube. So if you're watching it on some other platform, unfortunately, it's impossible for me to monitor all of them at the same time. I probably need some help with this. I need a moderator. So if you want to moderate for me at some point in the future and help me with this, then please reach out. I would love your help. And I'm sure we can come up with some type of an agreement. Okay, so I started with Port St. Lucie, and now I want to go into Jupiter, right? And there's a reason why I'm going into Jupiter, which I will share here momentarily. And you'd think I know what the alphabet is. Okay, so Jupiter. Let's go. And let me just make sure this is streaming the right way. Slipstream 28. Thank you, my man. I appreciate that. I always have good info. I'm glad you think so. There are lots of people who would disagree. And if you don't believe me, just check the comment section on most of my videos. Woo! There's a lot of hate out there, a lot of angry people out there. A lot of people don't like me. Fuck them. I don't care. If my crackers don't sit well in your bowl of soup, well, that's too bad. Go get a different bowl of soup or different crackers, which probably means that I am in fact crackers, but I'm not. I'm committed to sharing the truth. So where am I on this? Okay, so we're looking at Jupiter, right? Jupiter is a big market, right? And that is demonstrated by the number of homes that are for sale. And again, you're going to see the massive distortion between number of homes for sale and number of homes sold. But the trend line, the pended, is fairly consistent, right? So, and actually, the delta between for sold and for sale is fairly consistent too, right? Obviously, the last few years have been a complete role reversal. The market has flipped from buyers to sellers, and buyers have all the leverage, right? And again, that can be controlled if you price your home the right way, right? So I don't want to presume that you watch any of my content, but if you have, or if you're on any of my other social media sites, you'll see that I took over a listing from a owner who was looking to sell. They hired somebody else, which it should be noted, prior to them hiring somebody else, I showed their home off market to a client of mine. I did not think that the home was the right home for them, but they needed a massive home. They needed 7 bedrooms. They had a massive family, but they wanted something newer. They actually wanted something in a nicer community, or a newer, nicer community than Canyon Trails. They really wanted to be in something like Seven Bridges or Boca Bridges. But there wasn't a whole lot of inventory, so I showed them this property just to give them some type of understanding of what the market is, right? So there's no such thing as a bad rep as far as showing people properties. And also, I knew that or at least I suspected that the homeowner would be happy that I presented an opportunity to them off market, but they did not like my feedback at all. And what the feedback was, which I shared directly because that's what I do, I don't pull punches and I don't talk bullshit. I want to get straight to the facts and the numbers and the data, right? I don't want to waste your time. I certainly don't want to waste my time. Um, and I think I know my audience well enough to be able to communicate effectively and dispassionately when it's required. But the reality is, the feedback was this home, although it's beautiful and although it's big and although it's there's nothing wrong with it, it's dated, it's old, it's a gut job. And for them to do the work that was necessary to make it look modern, which again, it was a home from built in 2015, which is 10 years difference than when we were showing it, or maybe a little bit more than that. Um, but it's nobody's going to pay a premium for a home that needs to be updated, right? So I told them the truth. The truth is it's 950, period, end of story. But they did not like that number at all, right? So then some other agent comes in, tells them what they want to hear, lists it damn near $2 million, and the house sits on the market for a year with crickets, which I predicted. I told them exactly what was going to happen prior to it happening. And a year later, when everything I said was confirmed and was true, and they wanted to try it my way and trusted me to, well, then I created a market within the market, priced the home competitively to ensure we would get multiple offers which bid the price higher, which is exactly what happened in 6 days. And we ended up getting them more than they ever anticipated they would. We found the one buyer on planet Earth willing to pay more than anybody else, irrespective of market conditions. And so we actually got a buyer as high as $1,070,000. They did not want to take that deal. They felt there was some risk. I agreed with them. I thought the risk was minimal, less than 1%, because the buyer had a home sale contingency. However, that home sale contingency was past the contingency period or periods that were inherent in their sale. So the risk of default on that is very, very low, but it's possible, right? And they didn't want to run that risk. So instead of taking the 1,070,000, we took 1,050,000, and they were thrilled. They got more money than they ever expected, and also more money than I don't want to say that I expected, but I do know that had I had the opportunity to do this a year ago, I would have gotten more money than what we got. But nonetheless, raving review, huge fan. I love them. Shout out to them. Not putting any names up here. Don't want to put anybody on blast, but they trusted me, and I appreciate their trust. And I don't think there'll ever be a question about that with them again. But anyway, we're talking about Jupiter, right? And I went off on a completely different tangent that hopefully you were able to endure. But I apologize. I had been known to go down rabbit holes. Anyway, so we're looking at Jupiter, right? Macro picture. And what you can see, I'm not going to go into February versus January. I'm assuming you can see it. But what actually I will, because there's a massive distortion between February and January in terms of pended, right? But for sale and sold kind of remain consistent. And if you look at the two differences, they should be obvious, right? But pended properties in February versus January were down 40%. That's a big drop, right? What does that tell us? There are less buyers buying home in Jupiter or pending homes in Jupiter, right? A lot of that, not all, but a lot of that has to do with sellers overpricing their homes, period. And there's an epidemic of sellers that think their home is worth something far more than what the reality of the market is right now, which is great if you're hunting for opportunities. In fact, I talked to someone yesterday. Shout out to, let me make sure I get his name right, John. I'm almost positive it's John, but I got a lot of phone calls in the last few days. But that metrics I can accurate leading indicators to what's happening in the market right now, at least from my business perspective, right? The only thing I know how to track, or that I can speak to with authority as it relates to certainty, as it relates to demand, is the amount of people that reach out to me from YouTube or some other platform. But they find me on YouTube, they hire me to help them find their dream home, their dream lifestyle, negotiate the best deal possible, and then maxed out South Florida living to the fullest, right? The uptick that I've received in inquiries or people who want to hire me from YouTube and other social platforms has skyrocketed starting in January of this year. It was dead all of last year. So the leading indicator that I can talk about with certainty is that um, there is a mass amount of demand from people out of state looking to relocate into Florida, particularly my market, particularly Boynton Beach, particularly Delray Beach, particularly Palm Beach, West Palm Beach, also Palm Beach. I mean, the billionaires are going to Manalapan. They're going to Miami. They're going to Jupiter Island. They're going all over South Florida, and it's because of politics and it's because of taxes, right? They're simply not going to take what they're taking anymore, and I don't blame them. But the Mondami effect that people talked about, that, oh, everybody's going to leave. Well, there was no mass exodus out of New York instantly. But now what we're seeing is regular folks who it takes time for them to uproot. It takes time for them to divest themselves from their businesses or do what they must do in order for them to transition. Transition is the wrong word, but for them to relocate to Florida, we're seeing a big uptick in regular folks who want to be here. But then add on top the seasonal snowbirds, add on top all the other things that are going on. And the wealth migration, and I think the most recent stat from the IRS was from 2023. So this is extremely old, was something close to $20 billion of new income relocating into the state of Florida, right? Adjusted gross income coming into the state of Florida, which is great. That was 2023. It is exponentially higher, right? And we won't know that for another 2 years, but I don't need to wait 2 years to read the crystal ball. I'm not Nostradamus, but I do have common sense and I can see exactly what's happening in real time. And there is a mass uptick of wealth that's coming into our market, which is great for Florida. Still haven't talked about Jupiter. So here we go. For sale, March versus February, 346 versus 343, basically flat. Sold up 20%, 96 versus 80. Pended uptick almost 11% from the downtick of 40 to 93 versus 84. um, but man, there's a big difference between the 53 and the 93, right? So more deals are happening in March relative to February, relative to that's interesting. February 26, 53 pended, and yet February 1st through 28th is 84. Why is that different? I don't know the answer. There could be maybe there's something I'm missing, but it looks like there could be a tech error there. I don't know. But I did just notice it, figured I would share it. Let's just go to average versus sold in terms of price, because that's what everybody wants to know about anyway, right? Now, Jupiter, as you can see, is a very pricey place to live, right? How do we know that? Because the numbers say that. Average active price in Jupiter in February was 4.8 million versus 4.795. The average sold price, 4 point, let's just call it 4.9. 4.9, which is the average active price. Again, macro number, extremely distorted. It's never going to be hyper local until you drill down. But just know that Jupiter is a massive area and encompasses very wealthy areas, but there are more affordable places too. But massive delta between the average active and the average sold, right? Average sold was 2 million versus 1.652, an uptick of 27% in February versus January. And what do we see here? Well, the average active price is still on the uptick, 0.7, but the average sold is on the downtick, 8.2. Again, 1.870 versus a distortion between February numbers, current versus February. Maybe it's because there are more. That still doesn't make sense. I was going to say there are more days in the month of March, but I don't know. They're close. I'm just going to use what they have, and we'll pretend that they're the same, even though they're not. But the average sold price is down 8.2% in March, up to including yesterday, right? So what does April look like? Yet to be determined. I don't know. But this is not what you're going to see if you watch the Reventures. This is not what you're going to see if you watch the Michael Bordeneros. This is not what you're going to see when you see the clickbait headlines that are out there. they're not talking about my market 99.9% of the time. They're talking about Southwest Florida or other parts of Florida, which, to be clear, are very different than my market, right? So Southeast Florida, Palm Beach County, Delray, Boynton, Boca are very different. West Palm Beach, Manalapan, Palm Beach Island, which is its own separate MLS, they are very, very different than other markets in Florida, right? None of them are the same. They're all different. But there's a very big difference in what the market supply and demand is in each market, right? And builders in each of these markets are going to operate completely differently than depending on where they're at, right? And what I can talk about in my market is there are lots of builders right now that are offering tremendous incentives for you to buy their product. Why? Because they are in at big time risk because of the debt burden that they have, right? So their carrying costs, their all their costs, whatever they are, um, the tightening of money, right? They need these homes off their balance sheets immediately. They are certainly not running a charity; they are running a business for profit. And so, if they're offering you incentives, that's a leading indicator that something has changed as it relates to demand, right? Because that's just how business works. And so there are lots of builders that are offering incentives right now in my market. In fact, shout out to my gosh, Jerry's cousin. I can't think of the name of this guy. Brain fart came on me. But we just put somebody under contract, a friend whose name I should know, and I'm spacing on right now because I probably have CTE. But he got a mortgage interest rate which is far below what you would get anywhere else. And there is a wrinkle in the story and I don't know how it's going to play out. So I don't really want to put this at risk too much, but I've been pretty generic with the information. Turns out the financing company for the lender, I mean, for the builder, they're both in bed together, right? And there's something that is not right that's happening so far as it relates to this process. And so I don't know that they're going to honor the extremely low and highly incentivized rate that they offered him. They were giving him some bullshit, and I pivoted them to some people that shout out to Let's Talk Mortgages in Delray Beach on Atlantic Avenue because they do have a solution to his problem. I just don't know that that problem wasn't fixed internally on the internal side for the builder and the lender. So that is yet to be determined. I don't know. But getting back to the fact, I've said this since the pandemic craze. When I see things change in the market, when I see builders, GL, for example, who is the premier builder in my market, every community that they touch, all the land that is no longer available. But prior to the pandemic, GL was genius. They went out there, they bought all of this land in the western areas of Boca, Delray, and Boynton Beach, which nobody wanted. It was definitely not a place you wanted to live at that point, but they got it dirt cheap, right? And they built out these incredible communities with resort style amenities and built them out for families to come in, thrive, max out South Florida living to the fullest. And most, actually, all of them are resort style communities with, and yes, they do have HOAs. They're reasonable and they're not insane, which I know is not the case across the board for many people's experience with HOAs. But given that I lived there for 10 years, I know that it's, well, the HOAs are fine. What I will tell you is whenever you join the Facebook group of whatever community that you live in, you will definitively learn how crazy your neighbors are. So I will leave that there because people are nuts. And you'll be shocked how nuts they are. But don't worry, if you're in a if you're in a Facebook group for your own community, you already know this to be true. And if you don't think that, then you are the crazy one, which is fine because I like crazy. Anyway, where was I going with this? Yeah, so GL built out, developed these incredible communities in West Delray, in West Boynton, in West Boca. They even went as far as buying a municipal golf course and then built a community there because there is no more land to develop at all in my markets, right? many years ago, when I actually studied this and broke it down, I think there was a total of, and I'm totally fucking this up, so don't hold me to it. I want to say there was like 2 square miles of developable land zoned the right way for you to be able to do what you want. However, it wasn't in one spot. It was chunked out into like many tiny slivers that were all suboptimal and basically useless. So the last time I actually did that study in like granular detail, um, was probably 2000, not 2000, that's not true, 2020. And so I know it's much worse than that. So long way of getting to, there's no more land to develop, period. So when there is scarcity of resource and there is supply and demand and challenges on either side of that, well, you know what's going to happen. If there is no supply and there's tremendous demand, prices go higher. And that is what I suspect we're going to see as we get into those markets. But right now, we're still talking about Jupiter, but let's look at the month supply of inventory. And boom, this tells a very different story, right? Month supply of inventory down 12% January versus February, or February versus January, and then down 23% in March versus February, 3.6 months, right? So 3.6 months is a seller's market in Jupiter, period, right? And so that's great if you're thinking about selling a home. You just must price it the right way, period, end of story. And if you need help in Jupiter, breaking news. I today moved my real estate license to the locals group at LPT. So shout out to William Daly, shout out to Dana Koenig, thank you, shout out to John York, shout out to Ty Graham. I'm sure I'm missing a ton of people here, but while I'm doing shouts out, shout out to Miles Brookins, shout out to Marvin Charles, David Chiron, Peter Blitz Charles in the house at Sirhan. And of course, shout out to my real estate mentor, Joshua Smith, GSB Mode for Life. Just all the best of the best. But I share that because they are based out of Jupiter. And for me, and you're probably asking, well, why would you join an office that's in Jupiter? Actually, they're everywhere, right? They are in many different states, Tennessee, a host of others. I don't remember them all right now. Again, CTE. But what they have done, what they have grown is incredibly impressive. And also affiliated in, well, not in a business relationship, but they've got access to AirTab Entertainment, right? And you probably never heard of that, but you've definitely heard of Gwen Stefani. You've definitely heard of Josh Bryan. You've definitely heard of many of the artists that they bring in to do these VIP exclusive events. And these things are off the freaking chain. So for me to get access to both of those things and the top real estate professional on planet Earth, I mean, full-time, full-service real estate team of professionals that work together to ensure that whatever it is that you're looking for gets done at the highest level. I mean, I couldn't do any better. So shouts out to all them. Breaking news. That's where I'm at now. And then I'll get into mortgage at the end. But you definitely want to stay tuned here because here we go. We do have some stuff. Bum, 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 bum. I have them. They don't do the research. Hey, Chris, are you digging the subject two now that the traditional market is pretty dead? Sub two is alive and thriving. I bought a sub two in December. Curious what you think about sub two. I will definitely cover that. I am an executive member of sub two, and I've dove pretty deep into that. I have not executed on that in terms of my own business plan, but there are 1,000%. There are opportunities with sub two, and if you find someone willing to do that kind of deal with you, fantastic. There are also other, and you probably already know this, I'm assuming that you're part of the program. Shout out to Pace Morby. This guy is a MAGA guy. No, Malusha Georgie. This guy is a fuck you guy. How's that? Fuck you, period. Not MAGA. I am an American. I am a patriot. I love our country, period. And if you don't love the country, get the fuck out, right? That's where I'm at with that. Fuck off. Um, No time for that. Oh, fucking demonetize me, whatever. I don't care. But I have zero tolerance for this MAGA bullshit. I have zero tolerance for any of the. I'm actually, you want to know what label I am? I am non affiliated because I believe in common sense, period. Right. And so you probably don't have any, so I'm not going to waste my time with you. But I believe in common sense. I do have some values. I do have faith. I do. I do believe in Christianity, and I do believe in lots of different things. None of which are any of your business. But if you aren't excited, and I don't know how I didn't even mention this, if you aren't filled with patriotic pride that the United States and NASA just launched Artemis 2, if you weren't sitting there with a tremendous amount of patriotism, seriously, I don't know what to tell you. But that's unfortunate. Um, Three times MAGA is not neutral. Okay, so we're doing the rage baiting game. I'm not playing it. The housing crash is definitely at the door. Will 2011 prices come back? Well, let's see what the data says, right? Because um, the data doesn't lie. So we talked about Jupiter, and now I'm moving to. Uh, let's go to Boynton Beach. Actually, no, let's go to Miami Beach. Now, I know the Miami Beach condo situation is very different than the housing market situation, but let's see what Miami Beach looks like from a residential single family home perspective. Okay, here we go. So I'm not going to go there. Let's go to average versus sold. Woo-wee. Single family homes in Miami Beach. Average active price $13 million. Average sold price 6.4, down 34%. Okay. Let's go to March. 12 million, 12.1 versus 12.98. Average sold 8.6 versus 5.582. An uptick of 60%. A downtick of 34, an uptick of 65. Um, Net move forward, bullish move on pricing in terms of sold price. And it is what it is. What's the month supply of inventory look like? Skyrocketing. Okay, month supply of inventory, and this is the volatility that I love to see because it tells me that it tells a story, right? Now, the trend is either your friend or it's not, yet to be determined. I don't know, but all we're seeing right now is a massive volatility in a very short time frame, right? So and if you look at this chart, it's pretty much flat with the exception of this recent breakout. Um, but again, we need to see consecutive months of this similar pattern to call it a trend. Right now, it's just what it is, right? But we're going to continue to every month I do these, so we'll continue to follow the trend. And if you need to know in real time or want to know in real time because you're thinking about buying or selling in any of these markets, then reach out and I'll bring you up to speed in real time. Okay, so February versus January, 27 months versus 12, massive uptick of 120%. 27 months is in 2+ years of inventory is a screaming buyer's market. And then it downticked massively, down 52% from 22.3, 22.7. Again, distortion both versus these two numbers, which I don't fully understand. But it jumped back down to 11 months. Still not great, still a buyer's market, but you have to be affluent, you have to be wealthy to be buying in this market, right? We're talking about the average sold price of what was it, $2 million? $4 million. At this point, I don't remember. But let's look at the size of the market, right? Um, in March, 229 for sale versus 246, down 7%. The sold uptick 75%, 21 versus 12. Pended up 16, 29 versus 25. Not really surprising with all the things that are happening in other states. I'm not at all surprised that wealth is migrating to Miami Beach. Shocker. Actually, I said I wouldn't do condos, but I'm violating my own rule. because Miami Beach is typically an anomaly, but let's look at what condos are. Okay. So you can see the massive uptick in for sale, right? There's 2,000 condos that are listed or for sale in February versus January, down 2.6%. Sold, we're down 11%. Pended, we're up 30%. But if you look at the supply versus what's sold, supply and demand, massive distortion. But in March, an uptick of almost 30% in sold, 148, and a 16% uptick in pended, almost 200 versus 171. Let's look at month supply of inventory. This should be pretty big. And it is, right? Month supply of inventory, February versus January, almost 20 months versus 18. And now it's just under 13 months versus 19. Down in Miami Beach, you have absolutely, there is demand, but that demand is going to be very discerning. They're going to have all the leverage. They're going to dictate the terms, and you're very likely not going to get what you want because the supply is just so readily available, right? And Miami Beach is definitely a market to watch as it relates to condos. The surrounding markets are very important to watch as it relates to condos. And without going into condos, because I said I wouldn't, and yet I am, the condo market is going to be extremely challenged. It already is. It is a bloodbath if you're trying to sell a condo in most markets. Most of these condos are not capitalized the right way. Many of these condos are not where they need to be financially or structurally. And if that's true, there are massive penalties for these buildings and the homeowners in these buildings, and massive assessments for these homeowners. And if they can't pay and they can't make the building whole financially, well, then a developer's going to come in and buy it for pennies on the dollar. They're going to knock it down. They're going to build something bigger, and you'll be priced out even further, which is not good. But it is what's going to happen in the condo market. And we're already seeing it happen now. But I don't want to get too much into the weeds as it relates to condos because I said I was only doing single family homes. All right. So let's go back to, and I'm, wow, 47 minutes into this. And I said I would be brief. I don't think I'm capable of being brief. Most people who know me will probably confirm that to be true. Okay, so we're getting out of Miami Beach. Let's go local. Let's go to Boynton Beach. This is the city in which I live, and it is my favorite market. Oh, get rid of that Miami. And then I will. Okay, so Boynton Beach, to be clear, massive difference in pricing, massive difference in lifestyle between coastal Boynton Beach, between central Boynton Beach, and west Boynton Beach. Same thing with Lake Worth, which is another great place to live. West Lake Worth, great for families, more affordable pricing, great schools, tons of stuff to do. A much more affordable option relative to West Boynton, West Delray, West Boca Raton. But depending on where you're at in each of these markets, it's going to be very different. So there is something for everybody, but there's a massive distortion in life and lifestyle in each of these markets, right? So out east is going to be, you're paying a premium. Central is going to be kind of dead. And then out west is going to be essentially newer communities. But the newer is now older, right? In most of them, with the exception of West Delray and West Boynton and West Boca Raton. um, but these are older properties. They're established communities, and they're a great place to live. But it depends on what you're looking for. If you're looking for brand new, it's a different conversation. But Boynton Beach. So let's look at for sale versus sold. And again, macro picture. This is not going to be what the Canyons looks like, which is a hyper local market, which is in Boynton Beach. But what you can see is for sale, totally flat, March versus February. Sold uptick 19.1%. That's a big jump. Pended upticked almost 30%. Big jump. And if we look at February versus January, downtick in for sale, uptick in sold, massive downtick in pended. It is what it is. It's volatility. But at the end of the day, if you follow the trend line of the of all of them, the for sale, which is light green, the dark green, which is sold, and then the pended, it's fairly consistent, right? Um, it's not perfectly consistent, but it's fairly consistent. There is a massive distortion between for sale and sold as it relates to pricing and as it relates to overpriced listings. So I will not beat the drum too much on that. I already have. All right. So average active price in Boynton Beach, you can see what it was February versus January. And then, so it is important to understand February sold versus January, an uptick of 6.3%. And then March versus February, a downtick. So a gain of 6.3, a downtick of 7.7. Essentially flat so far this year. But a distortion between the average active price versus sold, right? Roughly $150,000. Well, that delta is indicative of a lot of homeowners that are thinking, or no, that are testing the market. They're testing it overpriced, and they're getting their teeth kicked in by the reality that they don't have the leverage anymore. And nobody seems to have told them the truth about what they must do if they want to sell and get the most money possible. But that is their problem, not mine. But if you are thinking about selling and you must sell and you want the truth, then please reach out. I'd love to help. Month supply of inventory in Boca, in Boynton Beach, right? This is going to tell the story. Is it a buyer's market? Is it a seller's market? Is it a neutral market? I don't know. Um, 1 month. So during the frenzy, we had less than a month of inventory. In fact, we had less than a week of inventory. At the height of the frenzy, when mortgage interest rates were at 2%, there was no inventory. And anything that got listed got sold immediately with multiple offers, which bid the price higher. And you had all the crazy bidding and all of the contingency waiving and the absolute frenzy of what that looked like. It was not fun for anybody, right? It was, except maybe the listing agent. It was definitely fun if you were listing homes at that point. But if you were a buyer's agent, you better be able to roll up your sleeves and negotiate and um, be able to advocate for your clients in ways that were more creative than the next guy. Because if you were using financing and you showed that you were using financing, you had no shot of getting that deal accepted. So you needed a strategy that made your finance deal appear to be cash and then have a lender that had the speed to be able to protect you within the contingency periods that exist, the loan approval and the inspection period. And if you can sync those two together, then there is no risk of defaulting or you losing your deposit or anything like that. And I can promise you that the seller does not give a flying frog's rat's ass if you're using financing or cash or not. But you don't need to let them know that as you're trying to get your deal accepted, you must present it as cash, even though it wasn't, right? But if you couldn't do that in that market and you didn't know how to do that in that market, you were completely fucked as far as getting anything done because that's what had to be done. And so that is something that is a possibility. But again, we're in a very different market, right? But what market are we in? Well, March, 3.6 months versus 4.8, a downtick of 25%. It is far more a seller's market in Boynton Beach than it was in January, right? Which was more neutral, more favorable to buyers. But don't get it twisted. Don't be confused. You have a lot of leverage in most markets that exist within Boynton Beach. All right, so we talked about price, we talked about month supply of inventory. Now let's go granular into a hyper-local market, which is the canyons and also surrounding areas. Now, the surrounding markets or the surrounding neighborhoods that exist in the zip code of 33473 are all very similar. Some of them are 55 plus active adult communities, definitely not where people go to wait for heaven's waiting room. These are people who have money and can afford to live the lifestyle that they want. And I will tell you, these seniors rage. I mean, between the paddleball and the amenities and the lifestyle, there's just so much to do in West Boynton Beach that if I didn't have to, I would never leave West Boynton Beach. But I do have to, so I go all over the place. I go, Chris, I go, you go, we all go. You won't forget my last name. All right, so for sale versus sold in 33473, which to be clear is not exclusively the canyons, but it's dominated by it. There are some surrounding neighborhoods, again, very similar, but they're all 55 plus luxury active adult communities. All of them are GL communities, right? So GL cornered the market in West Boynton, and they were super smart in doing so. But if you're shopping in any of these newer Valencias, just know that there are incentives that GL is willing to pay because they want to move inventory, right? But they're now catering. So I've said this before, there's no such thing as a bad market. The market's always good for someone. And as a real estate professional, we get to pivot to whomever it's best for, right? But if I don't know who it's best for, well, then I'm screwed, right? But I do, and so does GL. So their latest offerings in our market are all 55 plus active adult communities. Why? Because they have the money, they have the wealth. They're the folks who are relocating from New York, from California, from wherever, other parts of Florida, wherever it might be. I don't know. Maybe they're maybe they're in Mars. Um, but they're coming here because they want the life, the lifestyle, and the freedom and the amenities that GL offers without the country club amenities that are world class, without the country club fees. So if you're shopping and you see a home that seems to be priced extremely low, and you're like, holy crap, I found a unicorn, I found a home for 400 grand, and this house is incredible. Just know if it's in Boca, Delray, or Boynton Beach, chances are it is in a mandatory membership golf club community, which has a massive amount of country club and golf fees associated with that, to the tune, and it might even be, you might find a home for 300,000, 200,000. I don't know. Something very low that looks very affordable. If you find one of these unicorns, just know there are massive fees to the tune of $150,000 plus, and then annual fees and monthly fees and all kinds of fees that are associated with that, which most people, when they find this anomaly, it immediately prices them out of those homes. But if you think you found one, send it to me, let me know, I'll let you know. But it's not uncommon for me to get people who get all excited because they found this deal that is not a deal. Anyway, supply for sale in March 51 versus 47, up to 8%. Sold 13 versus 13, flat. Pended 23 versus 11, 109% uptick. Pretty big in pended. That's cool. And then from there, we're going to average versus sold. And the active average price in February versus January, 727 versus 713. So we're talking about canyon trails, canyon aisles, canyon springs, canyon lakes. We're talking about the surrounding Valencias, right? Um, and so it is what it is. That's what it was in February versus January. And now March versus February, which again does not make sense. How is there such a, I'm going to have to reach out to the data provider because this difference, this delta between the average active price in February versus the 727 versus 1.322 is completely fucking crazy. That doesn't make any sense at all. And I'm either missing something, which is very obvious, and I'm retarded, which I don't think is the case, or there's something wrong with their algorithm, and we got to figure it out. But the numbers in March versus, excuse me, yeah, March versus February, those seem more reality based than the previous month, February versus January. So I don't think these above numbers are correct, but I can't confirm that with certainty. I just believe that to be like 99.9999999999999% true. But I'll reach out to trend graphics tomorrow and figure out what's up. Let them know that there is an anomaly with their data. But average price 1.32 versus 1.322, down 0.2%, and then a big jump as far as average sold of 23.5%, 1.146 versus 928. That's a big move, right? So average sold, again, I don't believe these numbers, but if it's accurate that there was an uptick of 6.3% in the beginning of the year, and then the following months there's an increase of 23.5. Well, 6 plus 3 is 9, 29, almost a 30% gain in terms of average sold price so far this year. That's a whopping number, right? So the real estate market's crashing. Clearly, that is not true in 33473. There is massive demand in the canyons, in the Valencias. They're in 33473. You've got all kinds of resort style amenities set up for families to come in, max out South Florida living and thrive, that are extremely friendly, extremely nice. I've lived there forever. My family lives there now. And I mean, the numbers speak for themselves. So anytime anybody's relocating from another state and they've got young kids, well, then they want to be in the canyons or in 33473. It's zoned for the best middle school, Sunset or elementary school, Sunset Palms. It's zoned for the best middle school, West Boynton. It's brand new. There's parks, there's sports leagues, there's infrastructure, there's shopping, there's F45 gym that I go to all the time. Although, since I tweaked my shoulder, I haven't been there recently, but I'll be there tomorrow. There's everything you could possibly want out here and easy access to the turnpike, which gives you access to go anywhere in Florida. So a lot of people can work remote. Lots of people have to commute. Being next to turnpike is a pro. But you've got the Everglades out west. You got Bedner Farms. You got all kinds of great things, equestrian, horseback riding. Loxahatchee State Park. On the perfect day, I'll watch the sunrise in the morning at the beach at Oceanfront Park, and there's no traffic. It takes me 15 minutes. In the evening, I'll watch the sunset out at Loxahatchee State Park. That's a perfect day. Watch the sunrise, watch the sunset, and max out South Florida living to the fullest. But tremendous demand to live here, right? And month supply of inventory. What does it look like? 4.6 versus 4.9 months, down 6%, February versus January, and then March versus February, 3.9 months versus 4, down 2.5%. Is what it is, right? So still it is sellers, and again, I speak from experience. There are lots of overpriced listings that exist in 33473. There are lots of deals to be had. Many times these homeowners must get their teeth kicked in by the market to get reality based as it relates to pricing. A lot of time agents do not tell them the truth or tell them what they want to hear in order to get a listing. I will never do that. It's a waste of everybody's time and money. But just know that there are lots of opportunities for the right buyer in every market that exists within Florida. Okay, I'm checking to see if there's any Plantation and Davie. Silvio, yes, I absolutely will do that. Thank you for commenting and thank you for always watching, man. You're very, very loyal. Oh, and I am now missing whatever announcement Trump is making right now. So hopefully it is something that is resolution to what's happening over in Iran, because uncertainty is no bueno and certainty is bueno. Perhaps some of the surrounding regional players will decide to fund this war, or better, they call off the war and they've negotiated a settlement and everybody lives happily ever after. But what I want and what I get are two very different things. And I am enjoying a Monster Energy, but which is called Lando Norris, which I should not be drinking this at 50 years old. But anyway, it's 9 o'clock at night and I've been going since about 4:30 this morning. So here's to you. Raise them up. Cheers. All right. So I believe I covered the canyons thoroughly. And if you are interested in buying or selling in the canyons, we would love to help. Reach out. And then from there, I'm going to honor, actually, no, I'm going to do Delray and Boynton next. But then Silvio, I will get you back. Boca Raton is close. Well, The next city over to the south is Delray Beach, but alphabetically Boca is closer. So that's what we're going to do. And just know Boca's pricey, right? There is no you are not going to live in Boca Raton if you do not have money, period. Um, it's a pricey place to live. Now, there are more affordable places to live in Boca Raton, but just know that lots of markets within Boca Raton are extremely pricey, right? The cost of living in Boca Raton and Delray Beach and Boynton Beach, they're all actually everywhere in Southeast Palm Beach County is pricey, right? It is difficult for a first-time home buyer. It is difficult for a lot of people. And also, there are a lot of people that are in my market that are fake rich, that are living on the margins of where they should be prudently, right? No judgment, but the reality is you can only play if you're a high income earner and you make $1 million or $2 million or $10 million a year, but you spend 10.1, well, then you're not wealthy. You're in the hole negative 100,000. And I suspect there are lots of folks that are on the fringe that have been able to play the keep up with the Joneses game for a long time. Unfortunately, inflation and the cost of living skyrocketing and the insurance costs and the everything costs um, are now tightening their financial lives, right? And so a lot of people who are living a lifestyle that they probably shouldn't be, but they're keeping up with the Joneses and they got all the toys and the leased cars and the leased boats and the leased planes and the leased whatever, leased watches for crying out loud, or bought on credit, whatever the case is. If you're drowning in debt, it doesn't matter how much income you make. If you got more debt eats equity, debt eats cash, debt destroys you. And I suspect there are a lot of people who are on the fringe of that threshold, right? And I talk to a lot of people who privately will confide that some of what I'm saying is true. I don't necessarily get the whole truth, but I do know, I do have my finger on the temperature of what a lot of people are saying. So I do expect if things continue to worsen the way they have been, with oil prices and gas prices going through the roof, with the economic squeeze that's happening, with what we're seeing in the private equity markets, and now we're starting to see in the financial markets. Uh, there are a lot, and also the different cryptocurrencies, right? There are a lot of people who are just going to get squeezed and they will be forced to sell, which again, distressed homes right now are not a thing in my market. They simply are not they're nowhere near big enough to have any impact on anything. However, when the great financial crisis happened, and then so the stock market crashes, and then 6 years later, the real estate market catches up. There were lots of distressed sales. There were lots of bank-owned property. There were lots of foreclosures. There were lots of short sales. And when that number of distressed properties was 10% of the national market, it brought down the national market by 30%. It was a bloodbath, depending on which hyper local market you were. And so that was terrible if you went through that experience, right? But then separately, as bad as it was for you, and as bad as it was for the banks and the institutions and the owners or the debt holders, it was terrible. But there was also cash, dry powder, investor money that came in and bought on pennies on the dollar, scooped all that stuff up, and set themselves up for generational wealth. Now, I would love for that to happen. I don't believe it's going to anywhere near the way it happened the last time, unless there is a financial systemic black swan event that wipes everybody out, right? Nobody can predict that. I still will tell you that I believe that our market is more insulated than other markets because of the infusion of high net worth individuals that are coming to our market. But when a rising tide lifts all boats, a waning tide lowers all boats. So depending on where you're at in the cycle, you may be fucked. And if you think you might be on the fringe, and if you think that this might apply to you, well, then please take action now And I'm not saying that because I want, yes, I want the business, but I'm not saying it from my own personal perspective of gain. I'm saying it because if there is a big number of people, which I suspect they are, that are all sitting on the sidelines or testing the market now with unrealistic prices, when people must sell, when they feel the financial pain and economic pain that has become, it's too, once equity is not real until it's realized, period. So you could be sitting on a metric shit ton of home equity. It's not real till you sell, or you, period. End of story, right? Well, the pain, the economic and the financial pain isn't real until it forces you to, it is actually real, but it typically doesn't, it isn't the catalyst that it should be when it should be. People feel it far in advance of when they take action, which is unfortunate because when you have no options left, which everybody psychologically typically does, everybody is too broad of a term, but most people wait until it's too late and then everybody lists at the same time. And when everybody has to sell at the same time, then it becomes a game of catch a falling knives and nobody gets what they want. And prices uh, fall out of bed instantly, which again, I don't think it's going to happen that way in our market, but I'd love for it to happen. Frankly, um, it would be fantastic. And I won't get into economic policy and all the reasons why there should be systemic economic disaster across the board, because I don't know what the next catch a or pull a magic rabbit out of the hat game is going to be. Um, I just know that the president of the United States is a real estate developer who's already gone on the record numerous times that he doesn't want home prices to fall. He wants them to skyrocket, which he's playing to his base. He's playing to the wealthy, right? And he's kind of excluding a lot of folks, which he's doing lots of things to stimulate affordable homes. But the way he's doing it, which again, I've heard 10 different things so far. I don't know how it's going to be solved or if it will ever be solved the right way, but I do know that it would not surprise me at all if they come up with some kind of crazy, not crazy, to come up with some way to stimulate the real estate market for people who are economically challenged in a way that doesn't really make economic sense. Um, but I don't know, right? Yet to be determined. Okay, so we're in Boca Raton. We're talking about 669 or 639 homes for sale versus 684, which is March versus February, down 6.6%. Massive uptick, 20 point, or let's call it 21% sold, 186 versus 154. And then pended uptick 26%, 27%, 227 versus 179. So the real estate market always trades, period. No matter what the market, whatever the financial markets are, or whatever the economic conditions are, real estate always trades, period. Average sale price. Okay. Once again, these numbers don't make sense to me because the average active price in February, as per trend data, is saying 727. And yet that same period in February over here shows 3.462. I trust this number more than this number, right? So once again, I hate not having accurate data. Um, I do, so I will talk to Trend Get Graphics tomorrow to figure out what the hell the problem is. But this doesn't make sense to me. But this does. The average active price in Boca Raton in March, let's just call it 3.6 million versus 3.5, up 3.8%. Again, that's what the seller wants. Average sold price 1.83, 1.84 versus 1.775, an uptick of 3.6%. Boca's pricey, right? Period. And so it is a great place to live. It is a great place to max out South Florida living. My kids go to school in Boca Raton. Yeah, it's a hike, but it is a phenomenal place to live. Lots of people from California are moving. In fact, Patrick Bet David, Valuetainment, right? Shout out to PBD podcast. Uh, all the time, he's telling people move to Boca Raton, and his headquarters is in Fort Lauderdale, which I've been to. It's awesome. I love him. Go MAGA. Well, hopefully, I'm triggering the comment guy. Where'd he go? Mulishiv. Mulishiv. Bulashiv. You are full of bullshit. Okay. Where am I? I am, holy crap, an hour and 14 minutes. Silvio, I hope you're still there. I am going to try to move faster here. I'm talking too much. All right. So we talked about sold, month supply of inventory. February 4.6 versus 4.9, down tick of 30%. In March, 3.4 versus 4.9 months. Seller's market, it is what it is. That's Boca Raton. I'm going to start flying through these. All right. Delray Beach. Where are you? D. Why don't I see it? Delray Beach. And shout out to Let's Talk Mortgages, which is located on Atlantic Avenue, steps from the beach in Delray Beach. Great guys, great people for you to talk to when you want to talk about mortgages, and I'll tell you why in a second. But first, let me go through all this data because I'm losing people, I'm sure. All right, so we're in Delray for sale. 407 properties versus 431, down 6%. Sold 120 versus 102, up almost 18%. Pended 121 versus 104, up 16.3%. March versus February. Those are the numbers. Average sold price. Delray Beach is pricey, right? Okay, now these numbers are more accurate or more. I trust these numbers more in Delray Beach than I did in Boca Raton, than I did in Boynton Beach. Maybe the algorithm's working on this particular city versus those two. I don't know, but these numbers seem to make sense to me. Average active price 2.665 versus 2.563, up 4%. And the average sold price down 12%, 1.646 versus 1.866 in Delray Beach, right? So when I compare the change of February versus January, up 2% versus down 12, there is a big gap, right? So no bueno if you're looking to sell in Delray Beach. But to be clear, Delray Beach is massive. This is the macro picture. Depends on where you're shopping, depends on what kind of lifestyle you live. There is a wide range of different options for every price point in Delray Beach. And we're only talking about single family homes, right? Okay, so that's Delray Beach. I did Boca Raton. I did Boynton Beach. From there, Plantation and Silvio, I hope you're still with me. If not, I hope you come back. I'm going to timestamp this at some point here, probably not tonight. Plantation. Again, single family homes. Shout out to Silvio, your requests. I answer. Yeah, man, you're still here. I love you, dude. And I don't remember if you're a cash buyer, but I do want to talk to you about financing because it is really important. Looks like we got 8 people watching and only 1 thumbs up. Come on, if you're out there, give me a thumbs up, give me a like, give me a comment, give me a share. It helps tremendously on all the algorithms. I appreciate it. I love you for it. It helps the channel grow. It helps get this content in front of people just like you who want to know the truth, want to know what the reality of the market is versus the bullshit that everybody else is sharing. And I appreciate you. I appreciate you for you doing so. Okay, so Plantation, right? Where are we? Plantation, single family home. For sale versus sold. Again, big difference between for sale and sold. Trend line is basically the same, although it seems to be breaking out a little bit here in February. But it's still range bound, right? The solds are still range bound. Properties are trading, but the pricing and supply, I haven't talked about prices. The supply, the sold versus for sale, is pretty uniform, right? But I do see some blowout numbers over here. So February versus January, you can see down 12, almost 13% for sale. February versus January, 183 versus 210. Sold 35 versus 37, down 5.4%. Pended 58 versus 45, uptick of almost 29%. And then what do we see in March? Numbers are fairly consistent as it relates for sale. 187 versus 182, up 3%. Sold, big jump, up 57%. 58 versus 37. Big number. Again, still a distortion between February up here and down here. Don't exactly know why. I'll find out. I will ask and try to find out. Pended, massive uptick again, 73 versus 61. But the pended 30% and then add another 20%, 50% uptick in pended. Deals are happening in Plantation, right? Sold versus for sale. Active average price in Plantation, February versus January, uptick 5.2%. Again, you know this, Silvio. We've talked about this before. We are talking about a macro number, right? And Plantation is big. So you're going to have different, as you drill down to specifically where you want to be, a hyper-local market that you're shopping in, it's going to change, right? So just know that this is a macro number and it's going to be different. Each macro market has many, many micro markets that all trade with a different intensity of supply and demand, right? So until I know what you're talking about, I'm just giving you macro information. But the average active price in March versus February uptick 3.3%, right? And then the average sold downtick 3%. So a 7% downtick so far this year in Plantation as it relates to sold price, and a 8%, is that right? Yeah, 8%, almost 9% uptick in average active listing price. So there is a big delta between what sellers want and what buyers are willing to pay. But again, it's a macro number. It's distorted. I know that. You know that. But if you're selling in Plantation, no bueno, and you want to be in front of that if you are fake rich. And I say that with no judgment. All right, so that is Plantation, and now we're going to do Davie, and then I am going to bow out and tuck my kids into bed at 10, which they're hoping that I forgot about, but I have not. But shout out to both of my kids, Sawyer and Brooke. You have been exceptionally quiet and very, very good, so I appreciate it. I love you, and you're the best. Thank you for being such good girls. All right, so I just did Plantation. Now I'm looking at Davie, but I know they're hoping that I forget to let them stay up later, which they will regret in the morning, and so will I. Because when anybody doesn't get enough sleep, well, then getting ready for school in the morning is no bueno. Okay, so for sale in Davie, right? 100. I'm not going to go into backward looking to. Oh, yeah, I have to. So look at the volatility that exists in pricing or in for sale versus sold versus pended. For sale, downtick 14%, 163 versus 189. Sold uptick 77%, 39 versus 22, and then 54 versus 44, 23%. Okay. Those wild swings are volatility, right? Then what do we see? We see basically a complete reversal as it relates to percentage change. 165 versus 164 for sale, which is similar to February versus January, which is consistent with this pattern, right? Of this bar graph. But the sold are down 5%, 41 versus 43. Depended are down 5%, 53 versus 56. Really, the percentage change, kind of a nothing burger. But did we talk about price? No, we didn't talk about price. The most important thing. So February versus January. What I may have, no, I didn't cover this. I'm hallucinating. I need more Lando Morris. Or excuse me, Lando Norris. Okay, so we're talking about average active price of in February 1.73 versus 1.745, down 0.9%. Whoop-de-doo. But average sold price down 11%, 928 versus 1.46 million. That's a big kick in the balls if you're a seller in that market, right? But what do we see in March? Complete reversal. Average active price uptick 6.3%, 1.830 million versus 1.722. And average sold price upticked 15%, 1.97 million versus 952. So the trend obviously is your friend if you own a property in Plantation, right? Your equity, which is not real until it's realized, upticked, depending on when you bought, et cetera, et cetera. But the trend is your friend if you're a homeowner in Plantation in March. But if you look at the difference between the beginning of the year versus the last 2 months, it's basically a wash. It's basically flat. It's basically neutral. And it's pretty much the same story in most of the markets that I covered so far. All right. So now we have covered the markets that I'm going to cover. You're welcome, Silvio. It's my pleasure. Yeah, man, I know. I'll reach out on the side. Do you have experience with VA? Yes, dude, 100%. And many. Okay, so I'm done with. Let me remove. I'm not doing any more cities now. This is just me talking to you. I don't know who else is watching, but VA gets a completely bad rap. Um, a lot of times within the real estate industry, right? For some reason, real estate agents have the perception that VA is less than something else, right? And I don't look at it that way at all. I look at it as if, well, not as if, it is a massive benefit to a veteran, right? So you served our country, you earned this benefit, and for it to be marginalized or talked about a certain way, it's only because the agents who are, yes, sweetie pie, hi. I love you. You wanna come on? Do you want to be on my live stream? Okay. Rookie in the house. Rookie means business. You get shy all of a sudden. Better stay. All right. I love you. Oh, you want him? Okay. Better go. All right. I'll be done in a minute. When Brookie means business gets on screen, it makes my day. There was a time when they were much younger, when they were extremely enthusiastic and always loved to do content with me. And that was then, and this is now. So they, now I am cringe. Now everything that I do sucks. And now nobody wants to play the let's make content game. But that's okay. I understand. I'm sure I would have been the exact same way if I was in their shoes. Nonetheless, the VA benefit, right? So, are there different obligations that are required with a VA lender? Are there different inspections and appraisals and things that need to happen? Yes. Are they a big deal? No. Are they a deal killer? Absolutely not. Does a seller really care who, at the end of the day, when they're closing, when the money is wired into their account, do they care how it got there? The answer is no. And so, for a real estate professional or for a mortgage professional to try to sway you a certain kind of way because it's not in their best interest just tells me that whomever it is that's giving it the bad rap is not acting they're not acting with your best interest in mind. And also, they're not educated enough to be able to advocate for you the right way. But if that ever happens, then please just reach out because if it's not in my market, then I will put you in touch with somebody who can serve and support you at the highest level with the VA loan. But just know that anybody who tells you otherwise just does not know what they're talking about. And unfortunately, lots of agents don't know what they're talking about. And I'll be the first to admit, I did not know what I was talking about up until I did, right? And so I had been brainwashed um, within the mortgage world because I believed that some of the big lenders that exist in my market, some of the direct lenders that exist in my market, I believed and was brainwashed and was sold the bill of goods that they were superior because of the speed in which they're able to get shit done, right? And speed is critical. It is required when you're trying to negotiate. So you must have speed in order to negotiate big discounts when you're purchasing a home, right? And we need to pull whatever levers we need to pull in order to create leverage for you, whether you're buying, selling, or investing, right? But one of the requirements is speed. And so that's just a given, right? If you can't get a 10-day loan approval or less, 7 days would be optimal in a very competitive situation, which we're not in right now most of the time. But the shorter your loan approval is, the more competitive your offer is, because the seller knows that the deal will go hard once the inspection period and the loan approval period um, are satisfied, right? So you need a lender who's able to perform quickly and is trusted and is proven and can do that, has the systems, processes, team, people, resources to be able to do it very quickly. But there are lots of agents just like me who were brainwashed to think that certain lenders had a competitive advantage as it relates to speed. And what I've come to learn is that is not true. Um, what I also came to learn is that some of these lenders have built in margins, and I'll say that differently, have built in commission structures that that they benefit from, that the consumer never sees, that the real estate agent never sees. It is a hidden thing that nobody knows about unless you're in the mortgage industry. And I was last year. So I got to see how the sausage is made. And what I came to learn is that many lenders who I know, liked, and trusted have built in profit margins around 5% that nobody ever sees. And so when I realized that there is a massive difference as it relates to pricing for the consumer, I came to Jesus, and I pivoted to be able to provide a service of maximum value to my clients, right? And so with that in mind, it's Let's Talk Mortgages. They're based in Delray Beach. So shout out to John Diggs, Chris Jensen. I'm going to fuck up Carlos's last name. I'm not even going to try to pronounce Carlos's last name. He is a tremendous guy, but me trying to pronounce his last name is just going to butcher it. So I'm not going to do it. Also mentioned Steve, shout out to them, but located right there on Atlantic Avenue, steps from the ocean, which for me is phenomenal because I can shoot content all day long. And also there is no better place to be in Delray Beach, Atlantic Avenue by the beach, is some of the priciest real estate, some of the wealthiest people that exist on the planet. Maybe not on the planet, but definitely in Florida, right? So anyway, um, if you have questions to talk about mortgages, it might be you need to talk mortgages, you need financing, you need pre-approval, you need competitive pricing, and you need speed. Well, then please give them a shout. Their contact information is linked in my link tree, and that will be at the upper right-hand corner of this video when it eventually processes and renders. But I share that because within that link tree, there are a tremendous amount of resources that you probably don't know if you've never clicked on it. You will get my 2026 buyer consultation, my 2026 seller consultation. You'll get to see the property taxes, the property tax website calculator, which will show you what your new taxes will be, property taxes will be when you purchase the home, whatever home it is that you're looking for, right? Um, there will be a buyer and seller net sheet through a title company. There will be access to Let's Talk Mortgages that I just talked about, right? So there's a wealth of information that is valuable to you within the link tree. Also, there's my Calendly. You can schedule an appointment to meet with me. My buyer consultation are interactive on-demand video consultations, which are basically choose your own adventures that you can watch in your underwear at home at your convenience. Honestly, nobody wants to do a Zoom consult with me or waste their own time when you can get all of it on demand at your convenience. So if either of those things are valuable to you, then please click the link tree and you'll get access to basically anything that you need. What I don't have in there now, but will link, and it just hit me as we're talking about it. But I do need a link to Todd Beal, which is my insurance carrier. A lot of people are terrified of what home insurance or property insurance is. What they don't know is there's been tremendous improvement as it relates to insurance costs in Florida. Most people find that it's nowhere near as bad as that they think it is, which doesn't mean that it's cheap, which doesn't mean that it's not an expense. It is, but it's far more reasonable than you probably suspect. And most folks are kind of shocked when they see what their options are. So I will include him in my link tree here And we'll do that. If not tonight, definitely tomorrow. But that's it. Thank you for watching. I appreciate everybody and your participation. Please like, subscribe, share with a friend. I will see you on my next video. God bless America and get some.